Hey there, welcome back to our channel Investment Agile. Today, we've got a fascinating topic to dive into, one that's been on many minds lately. Should you buy a house, invest in gold, or explore the world of cryptocurrencies? I'm super excited to guide you through the pros and cons of each option, helping you make an informed decision for your financial future. So, if you're ready to learn, hit that subscribe button, and let's get started. Segment 1, Buying a House. Alright, let's start by talking about buying a house as an investment. Real estate can be an excellent long-term asset with numerous benefits. When you buy a house, you're not just getting a place to live, you're also acquiring an asset that tends to appreciate over time, potentially increasing your wealth. Imagine this, you purchase a house now, and in a few years, its value increases due to various factors like location, market conditions, and improvements you make. When you decide to sell it later, you could make a substantial profit. But, it's essential to consider the other side of the coin. Owning a house comes with extra costs, like maintenance, property taxes, and insurance. Plus, real estate isn't as liquid as other investments, meaning it might take time to sell the property if you need the money urgently. However, don't let that discourage you. Buying a house can still be incredibly rewarding, especially if you plan to live in it for a long time or use it as a rental property to generate passive income. Just make sure to carefully evaluate your financial situation and long-term goals before taking the leap. Investing in a house can be a significant financial decision with both advantages and disadvantages. Here are the pros and cons to consider. Pros. Potential for appreciation. Real estate has the potential to appreciate over time. Historically, housing values have shown steady growth, allowing homeowners to build equity and potentially benefit from capital gains. Stability and tangible asset. Owning a house provides stability, as you have a place to call home and build roots. It is also a tangible asset, meaning you can physically see and use it. Rental income. If you decide to rent out the property, you can generate a steady stream of passive income, helping you offset mortgage payments and other expenses. Tax advantages. There are various tax benefits associated with homeownership in many countries, such as deductions for mortgage interest, property taxes, and some home improvements. Inflation hedge. Real estate is often considered an inflation hedge, as its value tends to keep pace with inflation, providing some protection against rising prices. Control over property. As a homeowner, you have control over the property, allowing you to make improvements and customize it to your liking. Cons. High upfront costs. Buying a house requires a significant upfront investment, including a down payment and closing costs, which can be a barrier for some potential buyers. Market fluctuations. Real estate markets can be cyclical, and there's no guarantee that the value of your property will always go up. Economic downturns or changes in the local housing market can lead to a temporary decline in property values. Maintenance and repairs. As a homeowner, you are responsible for maintenance and repairs, which can add up over time and require budgeting and planning. Illiquidity. Real estate is not as liquid as other investments, such as stocks or bonds. It may take time to sell a property and convert it into cash, especially during slow real estate markets. Risk of vacancy. If you're renting out the property, there's a risk of periods with no tenants, resulting in a lack of rental income and potentially putting financial strain on you as the owner. Geographical constraints. Real estate investments are tied to specific locations, limiting your ability to diversify across regions easily. Investing in a house can be a rewarding financial decision, offering potential appreciation, rental income, tax advantages, and stability. However, it's essential to consider the upfront costs, market fluctuations, ongoing maintenance, and potential risks associated with real estate investments. Before making a decision, carefully assess your financial situation, long-term goals, and risk tolerance to determine if investing in a house aligns with your overall financial strategy. Additionally, seeking advice from a qualified financial advisor can provide valuable insights and help you make an informed choice. Segment 2, Investing in Gold. Now, let's talk about that shiny precious metal, gold. Gold has been revered for its intrinsic value and is a safe haven asset for centuries. During times of economic uncertainty, investors often turn to gold as a hedge against inflation and currency fluctuations. Picture this, when the economy faces challenges, the value of paper currencies may fluctuate, but gold tends to hold its value more consistently. This makes it an attractive option for preserving wealth during uncertain times. However, remember that gold might not provide the same growth potential as riskier assets like stocks or cryptocurrencies. Its value may not skyrocket like some other investments, so it's crucial to strike a balance in your investment portfolio. Including a portion of gold in your portfolio can add diversification and act as a safety net, but it shouldn't be the sole focus of your investment strategy. Always aim for a well-rounded portfolio that aligns with your risk tolerance and financial goals. Pros. Safe haven asset. Gold is often considered a safe haven asset during times of economic and geopolitical instability. Investors tend to turn to gold as a store of value when there's uncertainty in the financial markets. Hedge against inflation. Gold can act as a hedge against inflation. As the general price level of goods and services increases over time, the value of paper currencies may erode, but gold's value tends to hold more steadily. Portfolio diversification. Gold provides diversification benefits for an investment portfolio. It typically has a low correlation with other asset classes, such as stocks and bonds, meaning its value may not move in sync with them. Liquidity. Gold is a highly liquid asset. It can be easily bought or sold in various forms, such as gold bars, coins, or exchange-traded funds, ETFs. Global acceptance. Gold is recognized and valued worldwide. It has been used as a form of currency and a store of value for centuries, making it a universally accepted investment. Long-term store of value. Throughout history, gold has retained its value over the long term, which can offer investors a sense of stability and confidence in uncertain times. Cons. No income generation. Unlike stocks or real estate, gold doesn't generate any income. It doesn't pay dividends or interest, which means its return comes primarily from changes in its market price. Price volatility. While gold can act as a safe haven asset, it is still subject to price volatility. Its value can fluctuate significantly over short periods, which may not suit all investors' risk tolerance. No intrinsic value. Gold's value is primarily driven by market demand and sentiment. Unlike stocks or businesses that have inherent value based on their operations and earnings, gold's worth relies on investors' perceptions. Storage and insurance costs. If you own physical gold, you'll need to consider the costs of storing and insuring it securely. These expenses can eat into your returns, especially for large quantities. Limited growth potential. While gold can provide stability and preserve wealth, its growth potential might not match that of riskier investments like stocks or cryptocurrencies. Possible regulatory changes. Government regulations or restrictions on the buying and selling of gold can affect its liquidity and investment appeal. Segment 3, Investing in Cryptocurrencies. And now, let's dive into the exciting world of cryptocurrencies. Investing in digital assets like Bitcoin and Ethereum has captured the attention of many due to their incredible growth potential. Some early adopters have seen mind-blowing returns on their investments. Just imagine, if you had invested in certain cryptocurrencies a few years ago, you might be sitting on a gold mine right now. The crypto market has been a roller coaster ride, with prices soaring to unimaginable heights. But here's the reality check: cryptocurrencies are highly volatile and speculative. Their values can swing wildly in a short period, leading to significant gains or losses. So, before you jump into the crypto space, make sure you understand the technology behind it and only invest what you can afford to lose. If you're intrigued by cryptocurrencies, consider allocating a smaller portion of your investment funds to them. Remember, diversification is key. Having a balanced portfolio will help spread risk and increase your chances of achieving your financial goals. Segment 4, The Importance of Diversification. Now that we've explored each option, let's stress the importance of diversification once again. Having a diverse investment portfolio is like having a safety net for your finances. By spreading your investments across different asset classes, you can reduce the impact of any single investment's performance on your overall wealth. Think about it: if one sector experiences a downturn, other investments in your portfolio may be performing well, balancing out the losses. This is why financial advisors often recommend diversification as a fundamental strategy for long-term financial success. When it comes to deciding between buying a house, investing in gold, or exploring cryptocurrencies, there's no one-size-fits-all answer. It all depends on your unique financial situation, risk tolerance, and investment goals. Remember, be patient, stay informed, and never stop learning about the financial world. If you found this video helpful, don't forget to give it a thumbs up and share it with your friends. And, of course, hit that subscribe button and the notification bell to stay updated with more exciting content like this. Thanks for joining us today. Until next time, wishing you all the best on your journey to financial success. Take care, and see you in the next video. Bye.